and welcome to At the Forefront Fintech Conversations. I'm Michael Kingsley, a Senior Vice President here at Forefront. Joining me today is Samir Shalaby. He's the founder, president, and CEO of VersiFi. And VersiFi is a technology provider to the digital asset markets. Hi, Samir. Thanks for joining us today.
Thanks, Michael. How are you?
I'm doing great. Let's jump right in. So you've founded and been the CEO of a couple of fintechs, but those were focused more on traditional finance and assets. So first thing I wanted to ask you is what compelled you to venture into digital assets and why now?
Yeah, so maybe I'll start by giving you a little background about myself. I've been in the tech space for 30 plus years. I kind of split my career between Silicon Valley and New York City. In my 30 plus years, I've founded or co-founded a number of companies and that went on to exit either to the public markets or private markets. In the past 20 years or so, I've been more focused on the alternative investment space. And the number of companies that I founded or managed in that space were focusing on the ecosystem, if you will, providing solutions to hedge fund managers, private equity managers, pensions, endowments, asset managers. So we have a pretty good understanding and appreciation about kind of the ecosystem, the trading life cycle, the requirements, et cetera, from this community. So it's certainly been a great experience over the last 20 years in this servicing this market in a number of fintech companies. In the last 18 months or so, I've been in conversations with a number of hedge fund managers to try to understand their perspective on digital assets and some of the challenges and opportunities that it presents. And there's been a lot of interest from institutional managers to kind of enter and trade this new asset class that is evolving pretty quickly. And that's kind of created a lot of interest on my side to kind of see what kind of offering I could do and I could present to the market to help these managers to trade and kind of support their requirements moving forward. Happy to kind of dig into the details, but that's just kind of a little bit of a high level here for you.
Yeah, I mean, I think, obviously digital assets have been around for a little while longer than the past 12 to 18 months, but those have been some of the most exciting 12 to 18 months in the space. So I'm curious, what's that specifically happened in the recent history is what drove you to do this right now?
Yeah, so like you said, the last 12 to 18 months have certainly been, a lot of headlines going on every day in digital assets, and it's certainly been full of events. But kind of before we get into the specifics of that, let me step back a little bit and tell you some of the opportunities and challenges that those hedge fund managers have been experiencing. As you talk to the larger TradFi type managers, right? This is not the small $10 million hedge fund managers, but rather the billion plus asset manager or hedge fund manager that is looking at this new asset class. There's really three areas of focus that they keep having to evaluate before they can enter this market segment at scale. The first one is regulations. There's been a lot of discussions and a lot of focus on regulations, and the regulators are certainly very active, and especially in the last 12 months or so. But there's a lot of, there's a lack of clarity on what the regulatory landscape would look like for digital assets. And that's something that is obviously creating a lot of concerns from the actual hedge fund managers that want to invest, as well as the service providers around the space. So we're certainly hoping that there will be clarity and a roadmap that is satisfactory to the regulators, but also in line with how the investors want to invest, as well as the service providers that want to support them. So that's kind of the first bucket that these hedge fund managers are experiencing and focused on. The second bucket is around counterparty risk. So a lot of these TradFi managers have been around for a long time. They've certainly lived through the 2008 financial crisis. They're painfully aware of what happened when Lehman and others had to collapse, and as a result of that, they are very much in tune with counterparty risk and how do you manage it and exposure and so on. Now, when you look at digital assets and kind of the opportunities in crypto and everything around there, and you look at the counterparties that are present today for these hedge fund managers to trade with or to interact with, a lot of these counterparties are not, they're new players. They haven't been around for a long time. Their processes are not as robust. They're certainly not clearly regulated. Their offshore presence, versus onshore in the U.S. There's certainly a lot of concern around them, and we've certainly seen and experienced a lot of issues with those counterparties. So FTX being the most notable one in the last year, but it's not alone. FTX, Celsius, Voyager, Genesis. There's a lot of issues that we've seen from a counterparty perspective that has certainly amplified the concern of these hedge fund managers that are more TradFi managers in terms of how do they enter the space, who are the counterparties they should work with, how they should work with them, et cetera, et cetera. Today, you don't see the large banks that, JP Morgan, BNY Mellon, Goldman Sachs, Morgan Stanley, those types of banks do not exist today in crypto. And as a result, they're not, the TradFi managers are not seeing them, and they're very concerned. And now there's a new set of players trying to deal with all of these issues. So that's certainly an area of concern. And before we can see significant investments from these TradFi managers, we're going to have to see a solution to these counterparty issues. The last kind of bucket, which is also connected to the second, is around the service providers that exist in this space. A lot of the providers that exist are trying to offer multiple services as opposed to focus on specific core functions. And that is certainly creating, kind of a lack of segregation of any of these functions, lack of boundaries between the providers, whereby you might see natural checks and balances that exist between those providers. You just see, a number of players that are doing, everything, trying to be the one-stop shop. And certainly FTX was trying to do that. And then we all saw what happened. So it is a challenge. And again, the managers that exist today, they'd love to see much more focused, segregated functions that are offered by different providers, and they're all kind of working together to support, their needs. More similar to TradFi, where you see New York Stock Exchange is doing, or NASDAQ, they're doing exchange activities. You have the custodians, you have the brokers, you have the lenders, and so on, and they all kind of work together to provide them the full service. As opposed to just one entity doing everything. That certainly is not the model in TradFi. So when we looked at, all of these challenges, and we talked to all these managers, we certainly saw an opportunity to enter the market with VersiFi to provide a solution that addresses a lot of these issues in a way that is consistent with how these managers might want. But also without having to, create more counterparty risk, but rather reduce the counterparty risk. So at VersiFi, we're very focused on that.
Yeah, no, I like how you contextualize that in the course of time there, right? Because it's counterparty risk post financial crisis and dealing with service providers who exist, right, and are out there, but it's not necessarily the model that's the best to influence institutional folks and the largest amount of assets to come in and play. I think that's really good. And you're working with a lot of partners, as I understand it. So can you tell us about some of the kinds of firms, the kinds of partners you're working with, and the specific challenges you're working with them to solve?
Yeah. So at VersiFi, what we're trying to put together here, just to kind of bring it all to clarity, is we're creating what we're calling a partner-powered prime services platform, right? That is for digital asset, hedge fund managers that are institutional trying to invest. So what does that mean? Well, that means is we're bringing together an ecosystem of partners that all work together, but each one of them focusing on these segregated functions. So for example, if you're an exchange that is working with VersiFi, then your focus is only going to be exchange traded activities, trading and settlement and so on. And as you are focused on trading, you work with other providers in the space or that are within the ecosystem of VersiFi. So you wouldn't custody if you're an exchange, but you work with a custodian that is part of the ecosystem, and the custodian would focus on custodying the assets. And again, the custodian would not do other activity except custody. We're also working with lenders, and the lenders can provide, inventory to lend. They can provide, financing, etc., to the ecosystem. We're working with other liquidity providers, OTC desks, market makers, etc., whereby they can be liquidity providers in the ecosystem. And the idea here is every one of those partners focuses on their function, but we're all working together, and the VersiFi technology ties everything together for these end clients. So the end client can now start trading, they can borrow, they can lend, they can manage their assets, they can see where everything is, they can do everything they do in the crypto space, having to deal with VersiFi on the front end from a tech perspective, and then the ecosystem on the back end with all the partnerships and so on. We believe that this model eliminates counterparty risk because now the risk is certainly distributed across these partners, but really it is also eliminated from every one of the partners except the custodian. So we envision the client comes on board, they sign up with VersiFi, they sign up with a custodian, they open an account in the custodian that is segregated in their name. So it's in the end client's name, not in VersiFi's name, but it's in their name. And now all the activities happen out of this account. This account would facilitate trading. This account would facilitate the settlement. This account would facilitate, collateral if you're borrowing and you need to post collateral. So everything kind of happens out of this account, which sits in the client's name and segregated without any rehypothecation of the assets and so on. That's really important for these TradFi managers, and I think they're, they get excited to see that now we don't have to take exchange risk, we don't have to take other counterparty risk. The only focus would be the custodian, and they obviously take custody risk here, but they, hopefully the custodians that we're working with, being qualified custodians in the mix, that can certainly address a lot of the concerns that they may have.
No, it makes total sense, that kind of a value prop. But I do want to ask you, I mean, it's so straightforward and easy to understand. How is it that nobody else has tried this before? Is it just a function that the technology wasn't there and you and your team have unique expertise to bring this to market, or why has nobody else pursued this model previously?
So it's interesting that you asked this question, because when we founded VersiFi about a year or so ago, and certainly when the early days when we were talking about it, all of the discussions we were having with the managers, et cetera, all predated FTX and a lot of the issues that happened, post FTX and so on. But that was our vision, is we were going to build this. And in the early days, as we were talking to, the smaller managers, a lot of the feedback was, well, why do you care about any of this stuff? FTX provides everything, or, Binance provides everything, and that's fine. But we felt that this was the right model to get everybody else on board. But when we started talking to the counterparties, they were all like, why would I work with you? I have everything and it's all inclusive, and the managers are happy with it. And that all started changing post the collapse of FTX and a lot of the issues the contagion and the issues that happened. So now it's starting to become obvious that this is the right model, that everybody should be doing this. And by the way, this model looks and feels very similar to TradFi. So it's not like we invented a new market structure for everybody. We're just looking to what has been working for many, many years. And we're saying, okay, can we just implement a similar market structure and an operating model in a digital asset space and crypto? And that's kind of what we're trying to bring to market. But today it looks like a lot more obvious than it did a year ago.
Yeah.
So
that makes.
I feel like, in a way, these events have actually helped our value proposition a lot more than it would have otherwise.
Certainly made the need clearer and for everybody to understand. Well, it's all very exciting, Samir, and we definitely look forward to staying in touch with you, hearing more about it as things develop. So thank you very much for your time today. Thanks to all of you for watching and listening. If you want to learn more about VersiFi, you can go to their website at versifi.io. That's VERSIFI.io. A lot of the letter I there for you. And if you'd like to learn more about Forefront, you can visit us, of course, at forefrontcoms. That's COMMS.com. So thanks again to everyone for watching and listening. And Samir, thank you so much for your time today.
Thanks, Michael. Appreciate it.